companies, one of which is now Microsoft. He also started and sold an e-commerce business called Chaka.com. Currently a member of the Chartered Institute of Stockbrokers. Got into trading in 2016 by building trading bots as a hobby across exchanges. So, ladies and gentlemen, let's welcome CEO of Chaka, Mr. Toju, to this presentation. I believe we'll learn a lot. Thank you.
Thank you. And thank you for everyone for joining. It's great to be with an audience of investment enthusiasts as well. Before I get started today, I wanted to say that I think this is a presentation that hopefully is useful for everyone here. I didn't go into a sales pitch for the company, so it's really just at the end I plugged a little. But I wanted to make sure I address some things I think are foundational to understanding how stock markets work, and then also understanding why foreign stock investing is important. You can use us, you can figure out other ways if you'd preferred, but nevertheless, I would want to make sure that everybody walks away, if they don't already believe so, understanding why it's absolutely necessary to hedge against currency devaluation through foreign stock market investing. So I'll just go ahead and start. A little bit about me. Ibuku introduced me, so I wouldn't spend too much time. But what I will say is that I didn't start out as a finance professional or anything. It's always been a hobby for me to understand the markets, to understand what's going on in the markets, to understand how economies are linked to markets. I studied systems engineering, and my background is in engineering, data engineering. But I didn't want to be just an engineer, I guess, or at least just focus there. And I moved over more to the business and growth sides. And I have an entrepreneurial streak, as you can see through some of my background. I became a member of Chartered Institute of Stockbrokers because of my interest in the markets, not the other way around. I didn't become a stockbroker and then say, this is where I'll apply my trade. And I just put this background here just in case there are other people who find themselves very keenly interested in finance, but may be intimidated by the fact that some people have done this since they were in the early 20s, and you may feel like you can never catch up, and they're the experts. And I want to make sure that, we understand that that's not the way the financial markets work. And I'll explain a little bit about that in a second. So moving on to just a little bit about some market basics. These are some things that sometimes people don't get explained. Sometimes all you hear about the markets is what Bloomberg is saying, what CNN is saying, new stock market high, new stock market low. It can all seem a bit like gibberish. But at first, it's very useful to understand what is a stock market and work from there. And that's where we'll start. So stock is typically a company ownership unit. It can also be a fund ownership unit or some kind of structural ownership unit that represents value. And the stock market is just buyers and sellers of that. Every stock that is bought, there's a sell on the other side. And every stock that is sold, there's a buy on the other side. And then the market is just made up of many of such companies or funds or structures that represent that. And we know in Nigeria's case, we have not quite 200, but close to 200 companies on the Nigerian Stock Exchange. Zenith Bank is there, GT Bank is there. Most recently, is it Big Group Power or something that Otedo lies behind just listed. You saw the MTN listing. So that companies do list, and then the stock market is made up of this. It's crucial to understand the stock market is not the economy. So it's not reflecting the total economy, especially if some of the biggest companies or economic participants in the economy are not listed. For example, NNPC is not listed on the Nigerian stock market, but the Brazilian equivalent is listed on the Brazilian stock market. So in that case, and Saudi Arabian equivalent is listed in the stock market. So you can see in that case, if you wanted to buy into Nigeria's oil producing prowess, you couldn't do that through the stock market in Nigeria, but in Brazil you could, in Saudi Arabia you could. So the stock market is just many of such companies or structures that are listed. It's not necessarily itself the whole economy. So the economy can be going down, it's possible the stock market goes up. Economy can be going up, it's possible the stock market goes down. So it's really important. Sometimes the two are linked, but sometimes they're not. And in interacting with the stock market, it's usually through a stock exchange, and it's usually through brokers. So typically, all of us as customers or even as companies, you can't just go there yourself. You still have to go through licensed brokers, and that's how the structure is maintained. And so from that, we'll just move ahead. So why should you care, right? Like, what if your career has nothing to do with finance, has nothing to do with trading? Maybe right now is not the best time for you to be investing because of some other situations in your life that may not make you able to invest now. So if that's not the case, should you still care about the stock market? I happen to think the answer to that is yes. The stock market, besides helping you make money and save money, is very important. It's very useful for teasing out trends, especially in this era of fake news we live in, where you might hear one headline today, we might all believe it for a month, and then later on we find out it was a lie. Sometimes the stock market can be useful for teasing out some of the most important trends going on. I'll just give a few examples as to when the stock market knew about information before the headlines did. When it came to Brexit and the chance that the UK will step away from the EU, this was seen as just a crazy movement. But if you looked at the markets earlier, like we're talking about a year and a half before, it was already starting to get priced in. You'd have seen it in the pound against the dollar, like how it traded. You'd have also seen it in the pound, the yields on the pound based on how it traded as well. So if you were looking for the signal, you would have seen, wait a second, there are people who have money on the line who are saying that this may happen and it's moving. So when the news says, nah, it's not going to happen, maybe the news isn't reflecting the real chances of it happening, and maybe the stock market is more reflective. You see the same thing with Trump presidency. Some of the stocks moved in response to a lower taxation environment, whereas Hillary Clinton was for a high taxation environment. So again, seeing how as the campaign moved on, certain stock market behavior would have signaled that, wait a sec, is Trump really going to win this? And if you look at that period during the election, you'd have seen that the U.S. stock market was oscillating between being, we're about to enter a high taxation environment, we're about to enter a low taxation environment. And based on that, you would have seen what are very informed people who have money on the line thinking about who's going to win. Two more quick examples: Russia, Ukraine. You would have seen that again in pricing for assets in Russia. You've also seen in the oil price. And then right now, you also see that in China and the US. Chinese assets have been declining for quite a while that aren't even tied to the economy. Chinese assets are typically listed on their own stock exchanges in Hong Kong and the US, and they've been declining for quite a while. And through looking at certain stocks as well, you can kind of see that perhaps there's something more on the horizon. Now, I'm mentioning all this not to say that everyone needs to go become an analyst in the stock market, but it might be confusing as to why is it that so many people can maintain employment by being in the market. And, this quote from Axe, the fictional character in this show called Billions, was everyone has access to the same information. We just know how to analyze it better. And that's a similar thing, right? A lot of people in the markets, not just to buy low and sell high, but because they have prior information about reflective trends, certain beliefs about things that are going to happen, and to glean what's going to happen and then position for it. So again, you don't have to know all that. You don't need to go into it yourself, but it's important to know that the market is composed of these kind of participants as well. Now, moving on and looking at price movement in the stock market. This is another area where typically when people enter the stock market, they get this wrong. They think that good companies' stock prices will go up, bad companies' stock prices will go down, or low prices are good because they're more likely to go up, and high prices are bad because they're more likely to go down. But stock prices move with only one logic, which is prices go up when there are more buyers or more buy volume than there are sellers. Then the price needs to go up to be able to clear. So it would just be like, I've got, 10 units of Tosin and everybody wants to buy a piece and I sell at $1. Well, why would I sell everything for $1 if there are more people trying to buy than $1? I'll up it to 2, I'll up it to 5, I'll up it to 10, I'll up it to 20 until it's clear that nobody wants to buy again. And then that's where it settles. And then if those people want to sell, they might want to sell at the price they bought it at, but if nobody wants to buy it, they have to keep lowering that price. Because remember, every buyer in the stock market is buying from someone, and everyone who's selling is selling to someone. So this is what reflects prices in the markets. I'm sure all of us have been in positions where we saw something really weird, like a great company priced really low. You might see that on the Nigerian stock market, for example, right? You might see that. Why is it that Zenith Bank or GT Bank or somebody who you think produces really solid financial performance is their stock price is going down or is stayed depressed for a long time? On the other hand, you may see a scenario where some companies on the US stock market make no money at all, in fact, lose money. Their entire existence may be questioned, and yet the stock price is going through the roof. Why is that, right? It all ties down to this, which is what are people willing to buy and what do people want to sell? And that is what governs the dynamics of the stock market. Now, that might sound like the stock market is a bit more like a gamble and a bit more uncertain, but I'll just explain a little bit why that's still not the case. It's a bit more complicated than that. What happens is that, first of all, people have to identify that there's value in owning something. Now, value typically means you're buying it and you think it's worth more or at least that price and will appreciate. If enough people have that belief and buy into that value, inevitably it will lead to what looks like a boom, which is a new price that's way ahead of that first value price, right? Because now it's becoming more the case that people believe this is true. This may be like you bought Apple stock before Steve Jobs got back or when Steve Jobs got back and you thought there's value here. And then you held it and then the iPod came out, it did a little better. The iPhone came out, it boomed. And then it's like, wow, this is a great stock to own. And then everyone piles in, right? And then some kind of euphoria sets in where there's a crowd behavior, a crowd dynamic, where more people are buying, not because they looked at the stock, looked at the company, not because they looked at the fact that this company has produced all these things, which are very rational things to look at, and I'll advise everyone to do that, but because other people are buying it, and because other people have realized gains, and because other people are talking about it. There's usually some kind of euphoric element to that. People are placing their hopes and dreams in the market. At that point, that's a euphoria stage, right? And then typically, the people who got in at the value stage recognize that things are getting a little bit ahead of themselves. And while maybe they wanted to own this for a while or not, this is the time to sell because they've recognized that they wouldn't buy at the same price if they were just coming in. That typically starts a round of profit taking, right? Ironically, you hear about, most times when we hear about the news of like, this stock is going crazy, it's doing really well, like you see on CNN and everything. Ironically, that's usually in the profit-taking stage. It's not in the earlier stages. Usually the earlier stages go on without announcements. And usually the profit-taking stage is when everyone is hearing about it and everybody wants to get in. Most people then pile in at that point. The profit is taken by the people who bought in the value. Those people sell out fully. And the people who bought in late because of the euphoria, because of the excitement, don't have anyone to sell to and realize, oh, wait, maybe I overpaid for this. They want to get out, they sell, and they may even oversell to the point that the stock is way lower priced than what it should be. And then, it loops back and then some other people see value in it and then the cycle continues. I mentioned this especially because of where we are in the stock market right now. If we were in COVID, we would be in the value stage. Where we are now, we are in the profit taking. We're somewhere between profit taking and panic, right? We are somewhere in that region. We're past euphoria. Euphoria may have been late last year in the US stock markets. We are definitely more in the profit-taking and panic stage. Maybe not quite panic, but maybe more profit-taking. Why I mention this is that most people don't go ahead when they're talking about the stock market to explain some of these dynamics. So you have a lot of people who come to the stock market and just place their hopes and dreams, get burnt because they heard about the news on CNN about great stock, company they believed in, but they were really at the profit-taking stage, for giving the profit to somebody else. They see what's next, which is the price goes down, and then they burn from the stock market. They're like, stock market's not for me. I went in, I gambled, I heard about the news. This one's not for me, right? That's so many people's experience about the stock market. And it is structural because of this loop. Because most people hear about exciting stocks at the profit-taking stage. They don't hear about it at the value stage where things are underpriced. So I'll just go ahead and go on to the next slide. It's also important to know that because of this crowd dynamic, some certain stocks, which are very popular, may have more legs to run than some which maybe aren't as popular. So Tesla is currently valued at 700 billion, close to 700 billion. It went even over $1 trillion, more than all the car makers combined. Jury's still out. Are they worth that? Are they not? I don't know the answer to that question. What I will say for sure is that Tesla is a very popular company, run by a very popular individual, factually, right? Elon Musk has over 100 million Twitter followers. And Tesla itself is a very popular car brand as a brand. Even, it's getting there in terms of the number of cars sold, but like even more so as a brand. And so you can see that there are more chances for these companies which are very popular, that a lot of people want to buy into and believe in, to have maybe more of a sense of their stock price is some kind of popularity vote. So WeWork had the similar dynamic. It was as high as 30 or 40 billion in value. When it listed, it was in the 10 to 15 range. And now it's 1.7 after the profit-taking stage. Tesla has not gone down as much as some of these other stocks. Beyond Meat was at 10 billion during the euphoria stage in COVID. It's now 1 billion. It's lost 90% of its value. Domino's, mind you, was in the same, Domino's, which we all love their pizza, right? It was roughly in the same value ballpark and appreciated slightly to 12 billion. So I'm not saying Domino's price will keep on going up, but you can see that relative value, right? If you were excited about Beyond Meat because of what they were creating and you thought it was going to be revolutionary, there's a good chance that there was more of that cycle of, again, value, somebody seeing the value, there being a boom, it overshooting to euphoria, profit taking, and then panic selling. Now, the real value is how low will that go after people panic sell? And it turns out with Beyond Meat, it's 90% of their value. Clearly with Domino's, it's been a lot less. It's actually appreciated in the same time that Beyond Meat declined. And Tesla, while there's been a lot of selling, at least so far, it's held up most of its value, but the jury's still out for the future. Now, we get to the point that most people who deal with the stock market, when they're giving advice to others, give, which is Warren Buffett's advice, by the way, which is a lot more intelligent than people give credit for. People think this guy is just telling me something simple. He's not telling me his real secret. But the reason why Warren Buffett will say, buy good companies and hold them for the long term is precisely because of the dynamic I mentioned earlier. The value, the boom, the euphoria, the profit taking, and then the panic. Because in the short run, you're very subject to those dynamics. Depends on where you get, right? You bought Beyond Meat or GameStop when the euphoria was highest, and then you saw the profit taking and the panic selling, and you never got the appreciation. Stock market might seem crazy based on that price action. It might seem, why did I lose so much value? Whereas Warren Buffett would say, well, if you bought a good company, and even if it did all that, and you held it for a long time, after the panic stage, enough people will see value in it to still buy it again, to have it keep going up. And so even if those same dynamics of overshooting the price and then overselling, it kind of goes up in a slanted line. And being there for a longer time means that you are more likely to capture that value. So that's how the stock market is a waste. In the long run, is a weighing machine. When the short run is a popularity contest or a voting machine. So that just explains a little bit about those dynamics. This slide, I have to admit, is there to scare us all a little bit. I'm not going to explain all this. This is just to say that they are very sophisticated participants on the trading side of the market. And there are companies that are set up, they have high-speed computers, algorithms to trade against you on a day-to-day basis. This is not a big deal if you're in it for the long term, but the shorter term you are, the more likely you're up against these kind of traders, these computer traders. Now, I'm not saying we can't beat them as individuals trading, but it's important to know that they are digest more information, make decisions faster, are programmed by people who also trade. So, there is a strong sense in which these companies, which are some of the most profitable companies on the planet, Renaissance, for example, we're talking about they make 40 to 50% year-on-year returns in the stock market. Absolutely unheard of, right? Just because they're running these kind of models and trading it. And Bridgewater is a bigger fund, but it does some similar strategies. And D.E. Shaw, where Jeff Bezos, not many people know this, but before Amazon, he used to work as an algorithmic trader. So just to say, they're very smart, very technical people who work here. Shouldn't scare us because not all of us are looking to build trading bots, but if you are, and if you're looking to trade short term, just to know that it's not an easy game. And the longer term you go, the more it's really about the stock market as a weight scale, like Warren Buffett mentions, buying good companies and holding them for long term. Now, I mentioned all that just to give some very, very basic dynamics, because we're going to relate this now to the Nigerian, to why this is important for us in Nigeria, what the foreign stock market represents for us, and then some reasons why the Nigerian stock market too might be limited. I'm a patriot. I wish us the best. I really hope that we figure it out, but it's very important for your individual planning, for your family, that you are aware of the decisions you're making and where you're taking, let's call it patriotic risk versus where you're actually investing for good value. And so the foreign stock market is important for us, mainly because it's global dollar investing. That's the main benefit it provides us in Nigeria and Africa. And it helps us preserve or at least diversify our wealth building efforts. I'm going to leave this slide up for a minute because not many people do this calculation. We feel it, we think about it like, where was the Naira last year? What was the Naira 2 years before that? Oh, wow, I hope the Naira stabilizes. Maybe we'll just move up just a little bit. But we sometimes don't really look at exactly what's going on structurally. And if we did, we'll see that, as you can see on the far left here, the Naira has lost close to 75% of its value in the last 10 years. I think actually as of recently, this number has ticked up over 75% in the last 10 years. That might seem like, wow, that's so bad, but this is normal for African currencies, right? It's in the range of normal. You can see the CD is in a similar bucket. Even the Rand that everybody looks at, South Africa, they have a very developed stock market, et cetera, has lost over 50% of its value too, against the dollar. The dollar itself as a fiat currency loses just a little bit each year compared to our currencies, but still loses value. So it's kind of like where we have to invest and keep moving forward, even just to stay still. Now, if you're in the US, a US citizen, you invest in the US markets, maybe you just need to walk a little bit to stay still. But if you're losing 75% of your value like we are in Nigeria, we need to run to stay still, and we need to sprint to get ahead. And so that's why it's important for us to be even more proactive than maybe some people who are born into those circumstances of just living in a market that doesn't have a currency that loses value as much. I'll flip over to the right side, right? And when you look here, you'll see the country stock market returns in terms of US dollar in the last 10 years, right? So what this says is that if you wanted to hold market value and you bought, say, the Nigerian Stock Exchange or bought the cross-section Nigerian Stock Exchange 10 years ago, you would have just about been ahead in dollar terms. You could have kept your money in a bank account, just your dollars there, or you could have your Naira invest in the stock market, and you end up roughly around the same place in 10 years. Except that if you had your money in the stock market, you would have experienced a very volatile ride, the market going up and down, those cycles that we mentioned, value, boom, euphoria, profit-taking, panic, that cycle, you've experienced it, and you've ended up right about where you started. But if you held your dollars and just held them in your account, well, you wouldn't have experienced any of that, and you end up roughly at the same place. Now, if you invested those dollars over the last 10 years, now this number was a bit higher before the stock market sell-off in the US, but you'd still be over 200% ahead. And of course, this has been the decade of crypto in terms of returns. And you would have been roughly 10 times value ahead. Now, what's it that they always say? prior performance is not an indicator of future returns. And I need to be very clear with crypto on that. This 10x of crypto is like you invested in a startup in its early stages, it did really well. It does not mean that getting in now will give you 10x in the next 10 years. It does not even mean that will be positive. I really don't know with crypto. You might have to be more discerning. But the point here is that investing in a global dollar asset compared to investing locally, you can see the relative performance. And look, we would all wish that this wasn't the case. We will all wish that we could just be patriotic and that was the right value play. But we have to also be realistic, right? And see things clearly for what they are. And then if we choose to make that investment locally as a patriotic investment, then that's completely fine. That's like where the value is placed. But it's important not to be mistaken or to have or to be ignorant about it. And a very simple way to like just see why this kind of makes sense isn't just roughly speaking in terms of value is that if you're going to grow wealth, you kind of need to grow wealth where wealth is being grown, right? And so if you look at the world total stock markets in the world, total value of all listed companies in the world, it's roughly somewhere in the, you can see there, roughly in the 90 trillion range, like just above 90 trillion. The US is just a little bit under half of that at 40 trillion. And then you can see where Nigeria is. It doesn't even register on the scale, right? And that's not unexpected. We know this. So when you look at where wealth is being grown, it's not where we are, the top 10 markets in the world. You can see that Saudi Arabia, India, someplace in Europe, and then it's China and the US, right? And it's very important to understand this is where most economic value in the world is being created. And it's where your investment will go the furthest. Again, does not mean you should not invest in Nigeria, but do so with this knowledge that this is the trade-off. It might make you a more discerning investor here. And I think this is very, very important because we all live in a globalized world now. And it's not the case that we are all consuming just what is created in our country. If we made stuff, we consumed it, and it was a full internal cycle. And maybe this doesn't matter. Maybe all of us being quote unquote poor in dollar terms may not really matter because we have everything we need, at least in our functioning economy. But because that's not the case, we do have to be very discerning because capital is global. And I think for too long, the chances of of each of us being able to create financial wealth was tied to where we were born or where we lived. And it was like, if you live in the US or in a more developed market, your chances are the highest. And then if you go run below to a market that has maybe a booming or relatively big stock market, like say India or Brazil, and even sometimes we hear South Africa, since we're in Africa, then your chances may be a bit higher. And then in places for us like Nigeria, Indonesia, while there might be excitement, we might not see the real results and therefore not the real excitement about the markets. So for too long, I think the answer to this question of getting more people to be involved, grow their financial wealth in the markets, it's really been tied to where we live. But that's changed with the fact that there are now global companies, global infrastructure, the ability for all of us to participate in global markets. That changes things. Now, some people get really scared about the stock market. The idea that you can look today, stock is in one place, the price is in one place. You look tomorrow, the price is down. This is like a nightmare to a lot of people. And they feel that maybe just investing in T-bills is better. It's safer. It's more secure. I think that's a belief that's mainly because of the country we're in, which is in Nigeria, maybe the stock market doesn't go up. And maybe we have to offer more returns on our treasury bills to attract foreign capital. Because of that dynamic, it looks like T-bills is the way to go. And maybe the stock market is not the way to go. But in the long run, choosing T-bills over the stock market or over equities is really saying that you believe the government or a central bank will grow revenues faster than the companies in that country would. That's the same thing as choosing to believe that. Now, it may be the case in some countries, especially countries like China, maybe, right? China is not the case here because we've seen how many companies that are global that they've grown. But in a country that's maybe more communist, where the state has a bit more control, it might be the case that governments or central banks may grow revenues faster than companies, mainly because companies may not be growing revenues at all. It might also be the case in Nigeria for a similar reason, whether we acknowledge it or not. If we're more comfortable consistently investing in T-bills over companies, we are also saying that we trust our governments to be able to return capital better than companies. And that should reflect what we believe about the local market in terms of companies. So I'm just going to jump to the next slide and talk a little bit about what I think the most recent stock market onboarding event has been, which was COVID. It gave a lot of people a lot of time, introduced a lot of new people to the stock market, for better and for worse as well. And we'll walk through that. So a lot of people look at stock market, maybe they felt that, oh, COVID happened. I heard all my friends talking about the stock market. I was too nervous to go in. I saw the boom, it kept on going up. And then now I've seen it going down. And this is proof, boom and bust. And I didn't want to be involved in that. This would have been a heart attack. However, it's very important to know what were those people buying, what were those stocks, right? And what are the market cycles at play here? So the stock that I'm showing right now is a stock called ARK. It's an ETF. That's an exchange traded fund. If you've not heard about Kathy Wood, she's a manager, a investment manager who invests actively in companies. She invests in Tesla, Twitter, Roku, a bunch of high-flying stocks. So you can think of ARK as a bet on innovation companies, right? And what this point, that's this line, this is COVID. This is the peak of COVID, where lockdown started, rather. Not the peak, where lockdown started. And look at that price appreciation. It goes from roughly in the $36, $35 range to roughly $160 over the next roughly a year plus, right? So it goes up close to about 5 times, right? That's a really big price appreciation in that period. But then it goes right back down over the next, roughly year and a half to roughly where it started. So it never really went anywhere, right? And, this happens mainly because people got excited. There was a value stage around COVID. There was the boom. There was euphoria that took it more. And then from there, it's been profit taking. People are selling, more sellers here, more sellers there all the way. So best believe some people bought in here and got it way ahead. They didn't write it till here. And some people got it here and wrote it down here. And so they're winners and losers just in this chart, right? And again, it's that same cycle. GameStop is even more extreme, right? Before COVID, or even during COVID, before 2021, it was trading roughly you can see there, it was in the cents region, right? This is maybe even less than $1. And then it went as high as $120, right? It had a stock split, so if you actually go read some of the news about it, the stock prices may not look the same. It did split its stock, but just for the sake of this example, that's over 100 times turnover. I happen to know this because I did see someone deposit money during this euphoria at Chaka. They deposited $1,000, and 4 days later, they walked out with over $20,000. I had to do a double take. Where did this person get $20,000 from? They didn't invest this. We do this as just security checks. And yeah, they bought GameStop. They rode the wave. Here from Nigeria, somebody made a 20x on this investment. Now, I'm not advocating that you do this, but the point there is it still follows that same cycle of there's somebody saw value, bought early, and then took their profits at a stage where the market was more in the boom or euphoria stage. And we can see the stock has gone down. It's been bouncing, it's gone down, but it's still way above where it was before. So perhaps there was even more value and more people were pricing in, despite the craziness, right? But this kind of behavior is only because the market's liquid, they're buyers and sellers. You name your price, and if somebody's not willing to sell, you've got to go higher. And when you want to sell, if somebody's not willing to buy at that price, you've got to go lower. So the market's not a place where somebody's there setting prices. It's all of us participating setting prices. So in that sense, it's kind of a pretty fair quote unquote game. But if you're trading it, but if you're a long-term investor, there are different ways to look at it. And that's what brings me to this graph, this is Berkshire Hathaway, Warren Buffett's stock, right? This is COVID. Look, the ride is not as crazy as this or this, right? It's not as crazy a ride. It holds value for way longer. And yeah, it's dipped since the top. But who's going to bet that Warren Buffett's stock is going to keep going down to here versus rebound somewhere and keep going up? But at every single point along this cycle, there was probably a more exciting stock to buy, right? There was probably somebody talking about Tesla or Neo or Beyond Meat or something that was going gangbusters every day. But if you really just bought at COVID and held till now, you'd be close to double on Berkshire Hathaway with probably more peace of mind that you likely see more appreciation in the future. So it showed steady gains during the same period and still growing. Not that exciting. You might pitch Berkshire Hathaway to a friend. They might yawn that, look, the price was already at $239,000 per stock, and now it's $415,000, right? It's close to doubled, but it might not have been as attractive a sell to us. These are some of the reasons why some people aren't successful in the stock market, but need to be by looking at a bit more long term, or can be by looking more long term. I also want to talk about a stock that at Chaka during our webinars we plugged. WWE, World Wrestling Entertainment. We plugged it around COVID, and you can see it was roughly in the 29 range, still going up despite all the stock market craziness. The World Wrestling Entertainment as a company is still going up. I've been a wrestling fan since I was a kid, and learning about the media business and some of the, let's call it, family business dynamics behind the company. I think it's an underrated asset still. But the point there is that it may not have been that exciting for a buyer. It wasn't in the news. It wasn't something where everyone's talking about it. And so a lot of people may just not have considered it, or if they heard about it, thought, not that interesting. But often there's value in the stock market this way. And if the market ever picks up on it, the price appreciation may get crazier. There might be a dump because, again, it goes through the cycles of boom, of value, boom, euphoria, profit-taking, panic. Another one, and again, this is a very crucial one, COVID happened and there was a panic to sell oil. Now, we all know this picture because Nigeria, we are tied to this picture as well. And look at that oil price. Throughout COVID, you'd have thought tech was the best buy, right? But look at how oil, this is just a basic oil fund that holds barrels of oil, right? It was at low of 17. It went as high, here, roughly in the, I think it was in the 90 or 80 something region, and right now it's in 70 something region. So it's roughly right now trading, over 4 times since COVID. And again, I'm not saying that go ahead and buy oil. Oil is a bit more speculative. It's subject to booms and busts. But again, the point here is that there's a lot of value in a lot of places, and just listening to what they're saying on CNN or on Bloomberg isn't always the best way to guide your investments. It makes sense to look for where there's value. So we've talked about GameStop. So last one I want to talk about is the Nigerian market itself. This is the Nigeria ETF that pretty much reflects the Nigerian stock exchange in dollar terms. So it's tradable in dollar terms. So if you went, you could actually buy the Nigerian stock exchange in dollar terms, not in Naira terms. And again, here, this is COVID as well. We did see appreciation during COVID. We saw that the Nigerian stock market did do well. We were the best performer in 2020. In 2020, I believe, we were the best performer. Yeah, and a really big appreciation, right? One of the best performers worldwide. But due to currency effects and decline effects, look, it's back where it started. So you would have bought, if you bought in dollar terms, the Nigerian market, at the bottom of COVID, perhaps the best time to buy. Right now, you're right where you started, but with volatility. You'd have got those cycles. You'd have worried about the price going up and down. And right now, you'd be where you started, which is not worth it, right? If you could have held value. So this is unfortunate because we really wish this wasn't the case. But I've just come to paint that picture very clearly so that, again, we're all informed about how the market works and how it's worked so far after COVID, which was a very big event for showing who will have value in the future. And also a very big event for getting a lot of people in the stock market. So why is it that the US stock market and the US dollar works the way it does? You'll hear things about, for example, the China yuan, the China yuan, or whether it's the Russian currency. You hear about all these what do you call it? The renminbi, it's not the China one, the China renminbi. You'll hear about all these currencies, all these efforts by these countries to displace the dollar. And people may think that, wait, the dollar is not going to win because you have all these currencies and all these people looking to displace the dollar. You hear about this oil deal and that deal, and etc. But it's very important to understand that the dollar is not winning because people want to. It's winning because it has a network effect. The same way you may not want to be on Facebook or WhatsApp or Instagram or have you. You may say, oh, let's all quit together. But what are the chances that's really going to happen, right? You kind of need to be displaced by some kind of crazy left field upstart. And in that sense, ironically, something like Bitcoin, I don't think it'll displace the dollar, but may be more likely to than something like like the Chinese currency, like the yuan or any other kind of currency, right? Because they're all in the same system where the dollar is already the winner. It's already won the network effect. Another way to look at this is the dollar printed way more extra dollars since COVID than a lot of other countries. But why does it seem like other currencies are inflating faster than the dollar? Well, that should tell us something about the preference for the dollar in the system, right? So it is the winner of a network effect. It is the unit of account for some crucial commodity sales. It does have the market share lead, and it's controlled by the country with the biggest companies, biggest economy. And I didn't write that here, but also the biggest military, which does matter. So we call it, it's called King Dollar for a reason. It is the first of its name, and crucially, it's the last to lose. So a bet on the dollar going to zero, the dollar losing, is really a bet on the end of fiat currencies. So the dollar will be the last currency to lose. So in a scenario where the dollar did lose, best believe a lot of other currencies would have lost first. The pound would have lost before, the euro would have lost before, all our currencies would have lost before the dollar loses. So it's very important to understand that, and that's why the US has this dominance. It's why when there's shocks to the world system, everyone jumps to the dollar, because everyone's betting that the dollar will be safer than everywhere else. So next steps to go global, I think it's just to acknowledge a few things, which is going global is really about, looking to learn a little or learn a lot, and see investing as a life skill, right? It's not about tomorrow you shift all your assets and suddenly you're good. It's about saying, expand your perspective. Don't only look at the Nigerian market. Don't only look at Naira investments. Don't only look at real estate. Don't only look at everything that's been pitched to you and what you see in your front view. Everyone's selling you something on an investment. Yeah, the returns may be okay. It may be good, but best believe they're selling you that for a reason. It's much better to go ahead and do your own research and take a big global view and then narrow down to what you believe. In Nigeria, we're both lucky and unlucky. We're unlucky that we're not a major world economy like India or Brazil. Maybe we'll emerge to be one. But we're lucky in that because of that, we can actually take a broader view. We can look at all the imported products we use daily, and we can take a point of view on where the world is going. That means that we can invest and personally secure our future outside of what a country gives us. And then for everyone who gets global investing, it's very important to know that standing still loses money. And then you can then decide who you are to pick your approach. Trading is not for everyone. Fixed income passive investing, where you don't earn that much, in dividends, not for everyone too. You kind of need to figure out, who are you? Like, do you prefer growth value investing? Are you looking for good opportunities, but with some risk? Do you want the excitement of trading GameStop, knowing that you could lose a lot, but you could gain a lot? Or do you want safety, and you're in the stock market really because other options aren't providing that, but you still want safety? Depending on that, you pick your approach. But what I would say, and I want to make sure this is clear for everyone on the call, is that at Chaka, we are focused on making sure that people are successful investing. It's one thing to say, hey, the markets are available for everyone, right? Like you can go in and choose the markets. But I just showed examples of how different choices could have different outcomes. You could have come in, downloaded our app. You could have, been very prudent against the stock market, and then you could have bought a stock that went on a crazy ride up and down. And your experience in the stock market is very different from somebody who bought different stocks that had maybe steadier appreciation in time, even if not as crazy moves. One thing we are focused on at Chaka is making the people who invest successful at investing. We don't believe it's just about everyone investing. That's great, but it's also about people being successful. And that's why in this presentation, I want to talk a little bit about the fundamentals of the stock market, how investing in the stock market works, and why investing in the global stock market beats investing in the local stock market. I could have also pitched you our app, our features, here's how to use it. That may have gone into the market much faster, but it may not have made you more likely to be successful. And I'm hoping with how I've gone about it today, it's at least giving you a little bit of a taste of what you could get if you come to us for consultation, and we can guide you on how to be successful, especially in a volatile market environment. So thank you, and it's been great presenting this, and I hope there's some questions I can help answer as well. So it looks like we've got our first question, which is, as a stockbroker, do I think the Naira to dollar exchange rate will increase or decrease, especially as we head towards the general elections? I would say, okay, so we're now in general elections. I think that's February if they don't delay, right? Or is it March? But it's roughly in the next 6 months. So I'll say this falls in the category of a trade versus a long-term investment. So and again, we have to look at which Naira to dollar exchange rate. So there's the CBN one, which the official, and then there's the unofficial, what you get on the black market, or, if not Bookie FX, on, Binance P2P, as people are using that instead of Bookie FX now, right? So I want to first say that in the long run, so in the next 2-3 years, it's highly likely that the Naira trades less valuable against the dollar, that we see more Naira devaluation. However, in the next 6 months, it is possible that it could appreciate. I would be on the other side of that trade. I would bet that it would go down, but I don't think that the time frame is long enough that it's impossible that it appreciates. Right, in the next 6 months, it may appreciate, it may not. But I think you should expect that it's highly unlikely that any appreciation is long-lived, mainly due to the faith that different people have in the different currencies, and also the demand for the underlying currency. So we didn't sell as much oil as we normally do in the last however many years. And so what was the demand for Naira? We have less foreign portfolio investors investing in Nigeria. So what's the demand for Naira? So where's really the demand for Naira? And, you flip it on the dollar side, if Russia-Ukraine happens, everybody wants the dollar. If there's another battle of COVID, everybody wants the dollar. If China-US go to war, everybody wants the dollar. So again, there's a lot more demand for the dollar globally and a lot less for the Naira. And that trend looks to hold. So I would just say on that question, in the long run, I think the trend is pretty clear. But in the short run, it's a trade. And while I would probably bet on the dollar getting stronger against the Naira, it is quite possible that it holds or appreciates slightly, since it's a short term. I hope that helped answer your question, AAs, but please follow up if you wanted to get more specific there. I'll jump to the next question, which is, what advice can you give to people that lost their jobs, businesses, source of income due to COVID crisis, on where to start from considering the harsh economic condition in Nigeria, inflation and devaluation, with no capital or savings left to hedge or going to stocks investments, and with all lending institutions increasing their rates? Yeah, this is really tough, right? This and COVID, and then the subsequent economic effects, very brutal to different classes of workers, right? Like some people benefited because the area they were in appreciated. Some people lost a lot because the area they were in didn't. If you were a restaurant owner and you were just in expansion mode, it really did hit you hard. But then if you were a software developer, perhaps you benefited. So the main advice I can give, and and this is definitely outside my qualification to just be giving advice about how people should live their lives. But I would just say, from what I've seen, some people who got hit hard had to very quickly pivot to a secondary area of expertise. So they figured out some way they could provide value in where the economy was still going and where it was going strong. That's what I'd advise. When it comes to investing, you do need to have saved up enough to be able to invest. Otherwise, you might be forced to liquidate your portfolio because of your day-to-day needs. And when you have to do that, it is possible that if you're a long-term investor, you might have bought at a decent price or maybe a bit high price. And at the time you need to sell, even though you believe that the stock is going to still go up, you have to sell for your daily needs, and you might sell at a loss, right? In fact, that happens more often than we think. So my advice on that would be to ensure that you do have the capital base to stay in the investment you need to stay until duration, whatever that investment is, whether short or long term. And for loss of jobs and livelihood, easier said than done, but to try to go with where things are going. So, a lot of sympathy for anyone who was affected that way. Beda Umenesa has a very interesting series of questions here. Thank you so much for the presentation. It was really informative. How do we identify a stock that's about to trend upward against one experiencing euphoria? That's first. Second, what does it take to invest in foreign stocks from Nigeria? And third, what other companies have portfolios for buying foreign stock from Nigeria? I want to start with number 3. I'm not in the habit of marketing my competitors, so I'm sorry. You'd have to do your own research there. But what I will say on number 3 is that I'm a qualified stockbroker. Bo, my co-founder, who's on this call, is a wealth manager who's worked for Barclays HSBC. And our focus, what we live for as a company, is to make sure people on our platform are successful. And where I believe we're the only platform that provides the level of deep advice to ensure that people are successful on our platform, or at least not ensure, but at least give people the best chance that we can see, versus just access. So I will say that on number 3. Again, I'm not going to market competitors, but I'll tell you why I think we are different, because we care more about the success of our investors. On number 2, what it takes to invest in foreign stocks from Nigeria, you can just download our app. Or sign up at www.chaka.com. You can also email us and we'll help you with a consultation, talk about your goals, and we'll be able to help you get started investing. And on number 1, can I identify a stock that's about to trend upward against one experiencing euphoria? Yeah, this is a very good question, and it's at the heart of why trading is hard. If I could tell you the answer to this reliably, then it's like me giving you a license to print money, right? You just, every time you see that, just do it, and it always reliably work. But the market is not like that, right? We buy from others and we sell to others. So if all of us are learning about this stuff, it's possible the market evolves, and what worked once doesn't work again. But I will tell you a very easy way that a lot of people don't use, that, or that's been around for a while, that a lot of people don't use, but can help you sense check. Moving averages of stock prices are very good for understanding what has been a trend and a long-term trend. If you look at the 200-week moving average of a stock, the 200-day moving average of a stock, the 50-day moving average of a stock, and the 20-day moving average, and you look at their relationships, you can kind of tell when things are trending, where things are trending. Yeah. Hi, Danjibia. If that's okay, could you just mute? Hi, Danjibia.
Hold on.
Okay. Yeah. So on number 1, I can tell you that a lot of people spend a lot of time figuring out how to look at stocks that are just trending versus experiencing euphoria. But I will tell you sure signs of euphoria. Sure signs of euphoria are you go to Google Trends, you put in whatever it is, and you see that sky high recognition, right? Like you'll just see like huge, like, and I'll just freestyle here and just give you an example. Sorry, just to show you past 5 years. Can you see this, right? This is GameStop, right? It's quite clear that around here is euphoria, right? You can see that. in terms of Google searches, through the roof. Okay, this is even from Nigeria. If you look worldwide, through the roof. This is just one way. Like, there's lots of different ways for looking at where is something weird happening, right? And it's like, okay, people are going crazy over this one name. This has got to be euphoria, because how could he even get more crazy than this, right? So that's just one way that people do it, right? They look at trends. Another way can be looking at news. How much is something being mentioned in the news? Another way can be looking at whoever the buyers are. How much are they all congregating on this is the stock? Euphoria usually happens prior to profit taking, because after euphoria, who else is going to buy the stock, right? Euphoria usually catches all the remaining buyers that could potentially buy. So looking for ways to see buyer saturation or interest saturation, where the interest is so high you can't believe it can go higher, is usually a good way. But sometimes we believe it won't go higher, and it goes even higher, right? Like, I think Tesla is a great example. People have been calling the top on that stock for such a long time, and it kept going higher for so long that people have given up. There will be maybe some eventual top, but maybe that's not the important question. The important question is, are you buying at a good time? And I think a good way to look at that is to try to, I won't say time the market, but see that it's clearly not that people are hyping the stock to the moon. That's usually, if you're timing a stock, that's usually the way to look at it. Like, what are signs that there's less interest in this stock, right? So, for example, this Berkshire Hathaway, right? Like, everyone was making fun of Warren Buffett during COVID about how, he's old school investing. Perhaps that was a good sign that he was being undervalued, right? And then you might have bought him on all those news reports that you're reading about Warren Buffett's style of investing has gone out of vogue. It's now about meme stocks and everything. That might have been a great time to buy Berkshire Hathaway, just by saying, well, this is clearly a stock that's not being valued highly by the public in terms of perception. So it's a very hard question, that number one. It is something that a lot of people spend a lot of resources figuring out. And I just showed you a few examples about how you can identify it, but you've got to really think it through from first principles to know that case. And fundamentally, that's also a trader's question. I really want to make sure that anyone who's a long-term investor understands that is a trader's question, right? When you do buy there, presumably you'll look to sell at some future time that's not too far away. But if you're holding for the long term, you typically just want to buy when it's clearly not crazy, right? And you'll probably be okay if you're holding for the long term. So going to the next question by Chijoke Chikwendu, could I recommend 3 undervalued foreign stocks that I could buy using Chaka Invest? This is a great question, right? And mainly because a lot of things have been overvalued for a really long time. So finding undervalued stocks is a lot harder now than it was during COVID times. So I'll caveat this by saying that the answer can be for a trader or it can be for a long-term investor, and depending on what your timeframes are. So for a long-term investor, I would look for stocks from companies that have clear ability to produce cash, right? Where they are huge cash generating machines, where their core business is either not affected, or if affected, the effects are overstated. I personally believe Facebook is in that camp, or Meta, but a lot of people believe this is the end of Meta. I don't, but it's lost. It's been one of the biggest losers since it got beat down. So if you're a long-term investor and you believe that WhatsApp's value is not fully priced in, or Instagram's value is not fully priced in, or Facebook or their metaverse efforts are not fully priced in, then that might be a good stock to own, right? But again, I would say it depends on your time frame. Besides that, I would look in the tech sector at companies who have clear market dominance or just beating down for the trend, and I would hold it for the long term. There might still be lower to go. There might be a lot lower to go. So it's not the case that I might want to just go all in immediately. I might average in over a long period of time. I'm holding for 5-10 years, and I'm betting that the market will realize this value that we are in. So if we're in the profit-taking stage of the market, what's next might be more panic and then value. But some stocks may have already jump through panic and may already be at the value stage. Some stocks may still be in profit-taking panic mode. So that means that it's possible prices go lower. So when you're buying now, you have to buy with the mindset that prices could go lower. But if you knew exactly where the bottom was of the market, then again, you would probably be one of the richest people in the world. So it's still important to hedge yourself by buying repeatedly. Now, from a trading point of view, I would say that I believe that most of the undervalued stocks are actually more emerging markets, or at least not the US. So we have some of these. I think in the UK and in the EU and in other countries like Brazil, there are some extremely undervalued stocks. However, their currencies are experiencing enough volatility that you do take some risk in those companies through that. However, what I would say is that I'd be very interested, and again, I say this as somebody who's watching the market, I'd be very interested to see after the dollar's strength settles. The dollar is definitely still beating every other currency down. So that settles, where will most people put their money in? Maybe it goes back to the US stock market, but maybe it goes to some other developed stock markets that have really underappreciated assets. So I would say be very watchful of non-US developed market stocks when the dollar rally slows down. So that would be what I would say around undervalued foreign stocks, maybe not just the US, but UK and the EU as well. So it looks like I don't know if there are more questions or if anybody wants to go deeper into any of the questions I've asked and I've answered so far.
Thank you very much. Thank you very much. It was quite informative. Okay, thank you very much. Just before we go ahead, we draw the curtain. I don't know if there's anyone who would want to ask a question. You could kindly raise your hand. There is a button, I think the fourth button in the middle. So just like this, you see your hand up, something like that. Then you could raise your hand if you haven't written your question. We'll give him some time for that before we go. Okay. You have a question in the chat box. We take that. We'll have one more.
I'll go. I guess. Okay. I'll go ahead and answer this question by Colin Zidane. Thanks for the question. Can we as a company provide mentorship and investing in foreign stocks? I'm gonna answer this. That's to say that we provide consultations to help you in your portfolio. But I want to be very careful in answering this because I do believe there's a cottage industry of people who claim they can help people make money in the markets that really are focused on taking money from people, selling them get rich quick schemes or schemes about how to make money. It's also very important to understand that the markets are a place where the other side are other people. And so it's important to ask yourself, why should I be so lucky that somebody is just going to be giving me free alpha on how to make money in the stock market? Why isn't that person just hoarding it for themselves? Because if somebody really knew how to do really, really well trading, then why would they share that with me? Well, long-term investing works a bit differently. And that's an area where we are always happy to provide advice. And even in trading, because our business model is around transaction flow, we're happy to give out personal alpha because in the end, and we can disclose this, we do make money from your trades. So we're okay to share information because we have an incentive there. But I would just say that definitely be careful about when people just claim they can provide mentorship on investing in foreign stocks. So I would say your next step, Collins, can be if you email vip@chaka.com, you can look at whether or not you want to be trading in the markets or investing in the markets. If you want to be trading in the markets, you're likely to get more of a session with me, or we'll talk about how you look at your trading idea, identify it, how you position size it rightly, how you risk manage it, and how you time your entry, and working on your trading system so that to make sure that you are risk managed for the trades that you want to take. I believe that's probably the most important thing about trading. If you're investing, you'll have a session with Bo, co-founder, who will walk you through a balanced portfolio, what your preferences are regarding risks, how to build that, and will also proactively help you with building that. So those are the kind of ways that we can help. We help you with a more successful trading system, and we can help you with a more successful investing system. But I'm definitely not going to say that like just, oh yeah, we're just going to teach you how to invest. I think it's still a personal journey, but with our guidance, we've seen that people are more successful when it comes to both trading and investing. Emmanuel Pius asks us for the advantages of Chaka over bamboo. I'll just be very, very clear. We are more focused on making you successful. There's a reason why I'm here. And, I'm not here just flogging our app, saying download our app. We've got this feature. Stock market go up. Don't worry about the market going down. Shiny picture. I'm not here for any of that. I'm here just to tell you how the market works, common misconceptions, how, if you just followed the most hype thing during the market, you would have gone up and you would have gone down. If you listen to our webinars, however, you would have seen that a lot of what I'm talking about now, we talked about as it was happening. A lot of people who listen to our webinars have been very successful investing. And so, again, we are more focused on the success of investors than on just more people investing. And again, that's just our focus, whether compared to anyone else in particular.
Wow, I think that would be a nice place to rest it. Just before someone has raised his hand again. Okay, Emmanuel Pius. Okay, go ahead. We still have some time, but we'll soon draw the curtain. Okay, Emmanuel Pius, you raised your hand. I think you can unmute yourself and speak.
Okay, can you hear me?
Yes.
Okay, please, I wanted to confirm. Ameritrade and Interactive Brokers, they do have platforms where analysis could be done, as well as using automated systems, like building on, let's say I want to build on your system, on Chaka's system, like trading bots and things like that. Do you guys provide such services?
We do for some institutions who have that requirement. I have to say we don't provide it for retail, just as an open-ended service, but there are some institutions who have access to our APIs and can use them that way if they so wished. So we're more focused on, and in this talk, I'm more focused on individuals and successful investors or traders. But if you are an institution and you do have significant trading needs, and you want to execute those algorithmically over an API, that's something that we can definitely help you with. Yeah.
Okay, all right. I want to say on this note, we'll just want to say thank you very much. Mr. Tosin Osibodu, CEO of Chaka. Thank you for honoring our invitation to share. You are really making a difference in the lives of your listeners, and that's the best way to affect humanity. And thank you very much for volunteering. Okay, we do hope for those who would want to take the journey further. I'm sure you have the email, you have the website here, and I'm sure you could take the journey further if you want to do that. And on behalf of my colleagues, IBK and the others, we want to say thank you all who have taken some time to come this evening to join this webinar. And sincerely, we really want to wish you to enjoy the rest of your weekend. So thank you very much all for coming. And do have a great week ahead later. Okay, thank you very much.
Thank you, Mr. Michael.